Today I have a lot of concept I would like to share with you in this class today. But first, it's all about chart patterns, technical analysis. So right, in the last class I was trying to introduce you traders to chart patterns. Seems a trader is trying to get access to the class. Let's check out who is the trader, who is the latecomer. Someone is late to the class. Mr. Odinaka, you are late to the class. Yesterday you didn't attend the class. Wow, Mr. Odinaka, you are not consistent now of these days. So yesterday we discussed about chart patterns. Now let's go into the chart patterns. I told you yesterday, I said chart patterns is a pictorial formation of price movement in the market. Can I repeat myself? Chart pattern. This is a pictorial representation of the movement of prices in the market. Chart patterns, right? So whenever you see chart patterns in the market, they are what? Is my patterns correct? Am I correct, traders?
Yes.
All right.
Correct.
Chart patterns is a pictorial. When something is pictorial, what does it mean? When we say something is pictorial, a pictorial means something that looks like a picture. So yesterday in our classes, I told you that we have something like a head and shoulder chart pattern. Okay, I didn't tell you. I only told you the bullish pattern. I showed you the bullish pattern. I said we have the double bottom, inverted head and shoulder. I told you we have a narrow wedge slanting to the downside. It could break to the upside. This to the upside. This to the upside. And we have the falling channel to the upside. I showed you a lot of variations of bullish candlestick. Now, before we dive into that yesterday, I told you that chart patterns can exist in three forms. Chart patterns, they can exist in three forms. So you as a trader, you need to know the three ways in which chart patterns can exist in the market. Right? Now, we have the number one, which we call the continuation pattern. Continuation patterns are used to ride a trend or to continue what? The existing of a trend. When something is continuation, it means what? When something is continuation, it means you want to continue the journey. You want to continue the movement. That is continuation. Now we have what we also tag as let me just see who is trying to get in at this late hour of the class. Someone is trying to get in. All right. Now, right here we have the reversal chart pattern. When something is reversal, it means we want to go against reversal. And number three, we have what we call the bilateral. Please traders in the class, please help to check this spelling if my spelling is correct. Hope I'm not spelling bacteria. Is it bilateral? Am I right? Please check the price or check the spelling for me. Bilateral, am I correct? Please check this for me. Bilateral, reversal, and continuation. Am I right? Bilateral, am I right? Bilateral, am I right?
Yes, sir, it is correct.
Oh yeah, thank you. So when something is continuation, it means we want to use it for the continuation. Continuation, that is the, and I want to use another name for continuation. When something is continuation, that means we want to use it to I want to use another English which will be very easy for us to understand in this class. Additional. When something is continuation, we want to have it as something like additional, something that has to be additional to what has been happening before. Continuation, right? And number two, when something is reversal, we want to do what? Act against an existing move. For example, if this market is going up, this is a continuation bullish trend. Now, if the market is going up and then it reverses down, this is the point of reversal. Now, if the market is going sideways, it's either a break to the upside or to the downside. So this type of pattern is what we call bilateral, because we can't really know, or it is difficult for us to know the actual direction of the breakout. So it is bilateral, which means it can either break to the upside or to the downside. So that is bilateral. It has two possibilities. Reversal is the switch against an existing trend, and continuation means we want to keep on going in the direction of that move, right? continuation. It's a progressive move, right? Now, yes, progressive move. That's what I wanted to say earlier. Now, let's write this out. Now, in this tutorial, we are going to first start with what? Continuation pattern, because continuation pattern is so easy for us to trade as a trader in the financial market. Continuation pattern is so easy for us. In fact, as a beginner trader, my advice is stick to continuation patterns. Once you've mastered continuation pattern, then you can start trading reversal in the market. Reversal is tricky and risky, and it is usually advised to be traded by experienced or professional traders. So, as a beginner trader, first start your journey with continuation pattern. Now, in the continuation pattern, or in a continuation, or in a progressive move, or impulsive move, we need to understand that the market can move in two directions. It's either in a bullish trend or in a downtrend, right? Now, let's go this. Now, first, let's talk about the bullish trend. In a bullish trend, just like what I told you in one of our classes, I told you that a bullish trend is a market that is giving us what? Higher high, higher low. Now, you see this right here, a low, a low. Okay, let's just repeat it. I want you guys to understand this concept. Let's get back. Now, we have a low, a low, a low, a low. We have a high, a high, a high, a high, a high. Now, I want you guys to study what we have right here. Now, in this low right here, okay, this is a low. Now, in this low right here, the question is, what is the difference between this low here and the low right here? The difference is the low right here is higher or greater than the low here. So this makes it a higher low. Now, we have a low here, right? The low here is greater than the low here. So we have what? Higher low. The low here is greater than the low right here. We have it higher low. The low here is greater than the low here. Higher low. Now, from the top, we have a high which is greater than the high here. That means higher high. We have a high which is greater than the high here. That makes it higher high. We have a high which is greater than the high here. That makes it higher high and a higher high. So that is what gave us the formation of what we call higher high and the higher low in a bullish trend. So the abbreviation higher high means HH means higher high. You can see that it means a high that is greater than the previous high, and the right here a higher low means a higher low. What does it mean? It means a low which is greater than the previous low. Is that clear? Can we move on to the next section? Right now, let's get back to our price chart on our whiteboard. Now, based on what we have right here, now we now know, okay, in a bullish trend, we are looking out for what? To continue the market. Now, we are not yet done in that aspect. In a bullish trend, what can you notice? We have this trend move here, this move here, this move here is stronger than the move here. The move, okay, let's repeat this once again. Now, we have this. Now, we are going to use another color right here because I want you guys to understand this concept. Now we have this, we have this, and we have this. Now, you can see what we have at this zone. This zone. Okay, let's get this up. Now, as a trader, you need to know what we call the impulsive move. We've discussed this already. Impulsive move. Let's get this color off. You need to know what we call the impulsive move. When something is impulsive, what does it mean? I have a question, please. What is the meaning of impulsive? Please, first I will choose the person to give answer to this. I want traders who have been following me from August, September, October to give answer to this question. What is the meaning of impulsive move? Mr. Odinaka, Miss Odumosu, I want you guys to give me an answer of what is the meaning of impulsive move. We discussed this last month. What's the meaning of impulsive move? If you guys can't give answer to this question, it means I'm very sorry. It means see that you guys are not in this class. Okay, you are in the class. If you guys cannot give answer to my question, it means, in summary, you guys are not serious with this trading course. It means you guys are not serious. That is just a summary. Mrs. Odumosu, I want you to give me answer. Mr. Odinaka, I want you to give me answer to this question. If you are unable to give me answer to this class today, then it means you traders, you are not serious with this trading course. It means you are not serious. Miss Odumosu, unmute your mic and give me an answer to this question. What is the meaning of impulsive move? Please, I want you to unmute your mic and tell me something right now. By the count of 5, it means you do not know it. 1, 2, 3, 4, and 5. That is so bad and so shameful. Mr. Odinaka, it's your turn. Unmute your mic and tell me, what do you understand as impulsive move? I can't. From the 1 to 5, I want you to unmute your mic and talk. 1, 2, 3, 4, and 5. Wow, that's so very bad. It means you wasted almost months of your time doing nothing. That is so very bad. Can someone in the class give me answer to what is impulsive move? I want someone in the class give me answer to that. Unmute your mic. What is impulsive move?
It's a kind of move that is going aggressively in line with the trend that is going on the market.
Thank you. Impulsive move is a move in direction of the market trend. Simple as ABC. In a bullish trend, the direction is upward, and the impulsive move will move in the direction of the upswing. Ha 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 ha. When traders failed in trading, this is how they create their journey of failure. Number 1, they are not serious. Number 2, they do not take note of important factors. Number 3, they see trading just like they view trading like is it like a casino or like poker or like game, or what can I even describe it? Because as a trader, I've taught you this. We've moved more than going to 3 months now. Till now, you do not know what impulsive move are all about in the market. Now, tell me, how do you want to trade? If a signal is given to you, tell me, how do you want to know when to get in and get out if you do not know what impulsive move are all about? Wow. This is a shameful act behavior. Wow. That's very, very bad. Very, very bad. Very, very bad. Can someone tell me the opposite of impulsive move? Opposite of impulsive move. Can someone tell me the opposite of impulsive move?
Sir, a correctional move, sir.
Thank you. A correctional move, or corrective move, or counter trend move. Wow. Some traders just wasted their months, wasted their time, wasted their money, wasted everything. So as I was saying, I will never go back to this. Impulsive move, corrective move are the red. Corrective move are the red. A corrective move is a move against the trend. So it's a move against the trend, a move against the trend, a move against the trend. Now, for us to trade chart patterns as continuation patterns, we look out for the formation of chart patterns in the corrective swing or correctional swing. We can say corrective swing or correctional swing, or counter trend swing. All right, now we look out for chart patterns at these swings: corrective, corrective, corrective. Now this means if you want to trade the head and shoulder, inverted head and shoulder, you look out for your head and shoulder in these corrective swings. If you want to trade your channel, you look out for your channel in these corrective swings. If you want to trade your double bottom, you look out for your double bottom in this directional swing. Correctional swing. Take note, another name for impulsive move is directional swing, because it's moving in direction of the trend. Now let's wipe this out. Now this will introduce us to the first chart pattern on the list, which is one of the most common one, mostly used by traders and simple to use, which is what? Double bottom, which support a bullish swing. Now let's discuss the psychology and the technical analysis behind a double bottom. Double bottom double bottoms. Now what happens right here is, as the market open at this level, the market went down to give us a low. The market went up as if it's going up, then it comes down to give us another low, and then goes up, then breaking above this high. Remember, this is a low high. Then it goes up to break this level, giving us a break of structure. Now this low here is our bottom 1, the second low is our bottom 2. So technically this low right here is what we call our support or demand for price, right? Or demand for price. Okay, you can see that. Now in a downward swing or in an upward swing, whereby we have price going up, price got to this level, and then we have the double bottom forming as a corrective move, and then the corrective move got to an end at the second low, and the what? And the impulsive move continues up. Now the place of entry is at this break of the low high swing, entry right here. So if you are trading a double bottom in an uptrend, it necessarily doesn't need to give you a retest. Let's wipe this out and expand it to be bigger. Now the market is coming up. No, I don't like this move. The market is coming up. And then suddenly we have a pushback. And then the market gives us something like this. Do you get that point? Let's wipe it out again. The market was coming like this. I want to show the vector. This is a high, a low. We went high, low. Remember, this is what? A corrective move. A corrective move resulting in a what? In a double bottom. Now, this pattern becomes active at this zone. Some aggressive trader will come in, they will place their entry at this level, while some will wait for a breakout. Now, if you are trying to wait for a breakout and then a retest here, it's likely you may not see a retest. Why? Because the market is already what? In an uptrend. So we don't need a retest for validation. What is retest? A retest is a proof of validation. In an uptrend, if the market should break to the upside after a pushback, you necessarily don't need a retest of validation because the market is already in a bull trend and the market broke in direction of its trend. So 80%, 70% of time, the market or such market will never retest if it breaks out of a pattern. We need a retest if the breakout is against the direction. Let's say, for instance, the market was going up, 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 and suddenly we have a double top. If a breakout should occur, it is necessary for us to look out for what? For a retest. Why do we need a retest? We need a retest to show us that this breakout right here is now what? A potential low high or switch of trend from this bull swing to a down swing. Now let's repeat our chart patterns once again. Downtrend, uptrend, down, breakout. The neckline here, the entry here, depending on the direction. If it is a reversal, a pushback retest is needed for an entry. But there are some other advanced concept of trading whereby you have a double bottom like this, and like this, and the price push back to this level, whereby price close below this level. This is another concept of trading whereby price will dip lower into the 0.68 or 0.786 Fibo level. This is another concept we discussed in our advanced section of trading, which is based on the Fibonacci trading strategy. But for now, let's just stick to the simple format, which is in an uptrend market, we have something like this. And then we continue the market. Now, what we have at this zone, let's use another color to signify. What we have at this zone here is what? A double bottom. And what we have at this level from this zone all the way, no, let's use another, from this zone right here all the way right here is a corrective move. Now, all the price transformation in this red rectangular box is a corrective move against the direction of the momentum or direction of the bullish trend. Now you can see from this level we went up, we could push down, we went up, we pushed down, we went up, we pushed down, we break out. Now we have what we call low, higher low, a low greater than the previous low, a high and a higher high, a high greater than the previous high, higher high, a high greater than the previous high, and then we have another what? Higher low. Now at this higher low is where we got our double bottom pattern for the continuation. Now you need to see this as a ladder, just like when you climb a ladder or the staircase of a building. As you clear step up, as you move up through the staircase of a building, you keep on ascending in height, you keep on moving up. Now you get to a floor, you rotate at that floor, and then you make the decision to go higher to the next floor. So that is what happened right here through our double bottom. So in summary, as the price keeps on going up, price can't go in a straight line. Price will not move like this, and this is what majority of traders want to see in the market as a beginner trader. You always want price to go up. Whenever price is moving too fast like this, you got to be very careful, because that is what we call this TP move in the market, and this is a dangerous zone. Whenever the market is about to reverse, it's usually very dangerous, because the way the market moves up without a pause or a break, it has high tendency to do what? To fall without a pause. Now, in a bullish trend, we have upswing, corrective, impulsive, corrective, impulsive, corrective. Now, at each of these corrective, I repeat myself again, these are where we look out for our continuation pattern, and examples of patterns we look at are this corrective is a double bottom, and I showed you in a bullish trend how it can occur, right? I told you in a bullish trend, as the market keeps on flowing all the way high, we have it bullish, corrective. It can form here, bullish, corrective, bullish, corrective, bullish, corrective. But that doesn't mean this is the only pattern that can form. This is just an example. Now let's see another examples. We have a bullish trend, corrective, this, bullish trend, corrective, bullish trend, corrective, this is a channel, this is a double bottom, this is an inverted head and shoulder. Now you can see that. So in summary, your continuation pattern will do what? We formed at your corrective move. We put an end. Take note, the continuation pattern will put an end to the what? Corrective move. So in this class, we discuss how to trade the double bottom, the breakout to the upside. Now let's dive more into the anatomy of the double bottom. I want you guys to understand this concept very well. Now, based on the anatomy, no, let's get this up. Now, this is where we call the neckline. The neckline. Neckline. This point is the breakout. If it break out, this is bottom 2, bottom 1, bottom. These are the bottoms. This is what? The corrective move. Corrective move. And this is what? The impulsive move. These are impulsive, minor impulsive. These are corrective. Right? The breakout. Now let's wipe this out again. Double bottom can exist in different variations. It is not necessary you have to come to this level. Now let's see variations. Double bottom can appear like this. It can appear like this. It can appear like this. You can see. Now, right here, we have the equal lows but double bottom. EQL means equal lows, double bottom, equal lows, double bottom. And right here we have what? What do we have? We have rising bottom, rising bottom. rising double bottom, and on the point right here we have falling bottom. Now, of all these bottoms variation, don't always expect price will give you A or B or C, but price will give you one out of this. Now, they have more strength more than one another. Now, in a bullish trend, whereby you see B forming, whereby we have a what? A rising low. A rising low in a bullish trend means what? Higher low. This is supporting what? The bullish trend. So this has more strength than this and this. And this also have a better risk to reward ratio, because your stop loss will be at this higher low and not at the second low, but it can be slightly below to avoid whipsaw. Of all these three variations, the most difficult one with highest risk is C, because your stop loss has to be below your first bottom and your entry at this level here. That means your stop loss is wide. But this right here is a normal one. The risk is not too high and not too low. So traders, I present to you the double bottom. This is how you trade it. Different variations, different entries, risk levels. So it's a simple and effective trading strategy that if you as a trader can apply in the market to trade reversal or continuation, you're gonna love it. Well, just this single chart pattern can put food millions into your trading portfolio, right? If you enjoyed this video, this tutorial, why not do me a favor by smashing on the like, comment, right, subscribe. Thank you. And there is a view of one of the classes I held or I am holding right now, or we are presently watching right now with my VIP students. So I break things down and you can ask your questions and answers in the comment box. Now, VIP student, do we have questions? Ask me questions. Is there anything you would like to want me to explain better right here? If there's something you do not understand in the class, please let me know so that we can go through right here. Ask your question, please. Ask your question. Ask your question. Unmute your mic and ask me a question. Ask me a question. I want question from you. Is there any question? Ask your question, Mr. Confidence.
So good evening, sir.
Yeah, good evening.
So my question is, how does this trend patterns work along with candlesticks?
We are not talking about trend today. Do you make candlestick pattern with, if you make candlestick pattern with double bottom or trend line with candlestick?
Yes. Yes, sir. Yes, sir.
Come again, I don't understand the question you asked. Is it candlestick with double bottom or trend line with double bottom? Signifies
Candlestick with double bottom.
that is what we discuss in the next class, right? Whenever double bottom forms, you don't just have to enter instantly. There are some other things you have to combine. So I will show you in the next class. We are not yet done with double bottom. I just present to you the introductory to double bottom. We are still going to go through examples on our price chart. This is just the introductory. So I do not want to rush this. Okay, I just want us to take it step by step, right? So in the next class we combine it with more factors, candlestick, volume, structures, right? And I will show you live examples. So do you have another question in the class? That is all. Thank you. Okay, Mr. Steven, ask your question.
Yeah, thank you very much, sir.
You're welcome.
So please, I just wanted to know, is it that when the double bottom form, so when it's going like an impulsive move to the upside, is it that we should wait for a retest, or we shouldn't wait for a retest at all before we enter?
Waiting for a retest or not waiting for a retest depends on different factors. Number one, the volume involved, the direction of the trend, and the zone at which it has formed, and the time frame as well. So we are still going to define all those factors in our next classes. In fact, we are going to spend like maybe 3 classes on double bottom, because I want us to treat it thoroughly. It's not just about how fast, it's about how well, right? So in the next class, we are still going to dive into that, right? But for now, just know the double bottom. It forms in the corrective swing, and they are the low of a corrective swing in an uptrend market. And now you know the pattern, the variations, the types we have, right?
All right, sir. Thank you, sir.
You're welcome. Now, do we have another question? Is that all for now? Traders, this is Friday. Enjoy yourself. If you drink responsibly. And if you smoke, I will just say smoke responsibly. But I do not support that, because your lungs is very important. And if you drink, please, your liver is very important. So just make sure you do things wisely and think before you act. So spend your money wisely, and do not forget to go over the market, right? Go through the market and analyze the market, back test. And my VIP student, if you have any question, I'm always right here with you, right? So I will see you in the next class, which is gonna be Tuesday, right, next week, and then on to the Thursday and then Friday again. So enjoy your time. And those of you who are seeing the trade we send in the VIP community, manage your trade or close your trade. You can still close your trade right now in the Forex market, and I'm still holding on to my trade in the crypto market. So I share my trading, my position with my VIP students. So if one of my VIP students, by now you should still be in the trade I took in the crypto market. So we are still holding on to the trade. It's a swing trade. I'm a swing trader and a position trader. So I had my trade for a long time, right? So if you do not have the mind, you can close your trade in profit. If you do not have the mind in the Forex market, you can close your trade, right? I'll see you in the next one, right? Have a wonderful day, weekend to you. Spend your day spend your time, enjoy your time, have a nice weekend. Thank you. Peace.